This is a training video for dynamic band trading systems. In this video, I will discuss some of the case study of recent trade as well as those taken a few months earlier. First, this is MM2 Asia. We have three triggers for this stocks. The first triggers was sometime in April. This is our breakout bars. We place a stop loss one tick below our breakout bar. The stock actually make a high but didn't close well. Subsequently trade sideways without breaching the stop loss. And over here we have the second trigger. And shortly after that, it's actually a pullback. Notice during the pullback, the band actually formed into a line. This is indications of the drop in the volatility. And we like to actually manage it closely. Now, we do not like the bar to trade below the line. The next day, there was a follow through with the range expansion and the line formed into a band. Now, over here itself, it starts to actually move downwards, pull back here, and pull back it below the upper band. Here we need to pay some attention to the trades. Over the next 3 bars, you continue to trade this way. And over here, you start to actually move up. So this shows us that we are on the right tracks and it actually followed through the next day. We will continue to use the band to actually manage the positions so that we lock in bigger profits. This is Citinium, one of the strong stock recently. This stock has 3 triggers. Sometime in late March, there was a triggers. After the trigger itself, the stock actually drifts sideways, trading below the upper band. We continue to watch this closely, and it actually finally moved upwards, tagging the upper band, and that is generally good. And over here, you notice there were a couple of bars they were not able to close well, and it started to actually eat into the band. And finally, here it closed below the band, and we will have gotten out the trade. Subsequently, the stock actually going to the congestion box. So here itself, stocks actually doesn't have any volatility. So here, we just have to actually leave the stock alone. And finally, we have another trigger over here. We place our stop loss below the breakout bar, and on this day itself, it hit our stop loss. So this is a failed trade. Now our risk is always limited to overlapping bar risk, but we enjoy runaway bar gain. Okay, that's the key advantage of dynamic band trading system. Now over here, actually what happened was that this 2 bar itself, the volume start to pick up, and on this bar we have a DB trigger. Alright, notice the volume is also good and began to trade above the band. So this is extremely strong when you trade above the band. Here we have the first tag. And finally, this is another tag that shows that the stock is probably losing momentum. And it starts to eat into the band. And finally, here it trades below the band. And here we got out. And notice, eventually it goes into the box. This is Bashwell, again one of the strongest stocks recently. Over here, we have the first trigger sometime in early April. And also mentioned in previous videos, here you probably will get out, because if you notice over here, it forms a series of bars that is above the upper band. So this is extremely strong. Any sign of weakness is a good times to get out. And this is the first sign of weakness, and we could have gotten out since it closed poor. Alright. Now the stock actually still within the band, and this is our re-entry. Now, if you have gotten out here, this is your re-entry. If you have taken partial profit, you continue to manage your trade. If you notice, actually, you start to actually tag the thing very nicely. Over here, we have a move above the upper band. And here itself, this is the first sign of weakness. Now, here we have a long tail. We could have placed a stop loss here to manage it closely. If you notice, the stock actually trades sideways. Now, these are a series of up bar. Even some of them trade below the band. But it's generally something alright if you put a stop loss here, but any sign of reversal bar, you should have gotten out of this trade, but they are all up bar. So it's generally nice. Now, if you have gotten out, this is your re-entry. Okay, when you break above this high, and it actually starts to actually move upwards. And if you notice over here, it starts to actually form a line. You go into the congestion box, and here, it trade below the line. Here, we should have gotten out the trade. Now, during this period itself, we should be extremely mindful. Why? Because the stock actually make new high with lower volume. This is unhealthy. And finally, here we have the last break. Okay, we slightly increase in volumes, and this is very aggressive. This 3 bar itself, we compare to the other bar, are extremely big. That shows that actually this is very strong on a very short-term basis. This is sometimes called the exhaustion move. We are very concerned with this type of sudden move. And what happened was that on this bar itself, we could just put our stop loss at below this bar here. Since this is a strong move, any sign of weakness, we should get out. And this is what happened on this day. You actually break below this low of the bar, and we should get out of the trade. Now, the fact that this is a very big reversal bar, stock is likely to become range bound, not likely to perform on a short-term basis. Now, let's examine over here on the 22nd of April, where you actually form a topping tail. Now we could have switched to a 2-hourly charts to trade, to manage the trade closely. This is what happened on this day itself. It moved upward and we have this white ring reversal bar, and here we have just gotten up. Alright, so this is something we can do. If the stock do an accelerated move, you can switch to a shorter time frame to manage the trade closely. This is Jumbo. Now this is our first trigger, recent trigger in May. And again, usually we do not like a very high volume. That shows that its move is exhausted. If you have taken the trade break, the stop loss one tick below the breakout bar. If you notice, actually you pull back without breaking the stop loss. And finally, here we have a second triggers, and we manage the trade accordingly. There was the pullback, but the pullback is just trade still above the lower band, which is generally still okay, and begin to move upwards. Now, over here, we notice a band form a line. They show that volatility has dropped off, right? And over here itself, we have a bar that actually rejecting the high. So here you could have gotten the trades, if not this one, where you trade below the line. Alright, now with bar like this, it's likely to become range bound at best. So we just watch to see whether there's any further break on the upside, and we can just re-enter this trade. This is Chinese Aviation Oil. This is one of the best performing oil stocks recently. Here we have a profitable trades. This is our second one. And over here itself, there was this gap. This gap is caused by dividend. So if you get below more than the dividends, you just get out of trades. And here we have a re-entry. Notice the trust bar, again very high volume, likely to pull back, and this is what we experienced. It actually trade sideways before moving up again. And over here we notice it formed a line, and this need to be closely managed. And finally here we have the next trigger, and this is what the stock is currently doing, generally healthy. Just use the lower band to actually manage your trade. Now we generally would like to avoid stocks with overlapping bars. In this case it's for shorts, and the fact that this are just overlapping bars, we stock likely to be very sluggish, so we just avoid stock like this. Likewise, stocks like this with a lot of overlapping bars generally are no good for trading, in particular short-term trading. So we just avoid stock like this even though we have trigger. Likewise for this, so very sluggish, so we just avoid stock like this. This is SMRT. Now over here we have a break, and this break is very nice because of those good volume, and it actually continues to trade above the band. So this is extremely strong. Notice that it's gap between the low and the band, so that is actually very strong move. So any side of winners, we should take advantage of the opportunity to lock in profit, or to at least take partial profit. And this is the first down bar. So technically here we could have just take partial profits, and over here it's the first sign of caution because it's the first stack, and here it begins to actually close between the band, and here you close below the band. So here, the worst case, you should get out from here. This is Halcyons. Again, very nice both over here, and finally if break below the lower band, you could have gotten out. There was a recovery, so this is a re-entry. Alright, and this is another profitable trade. This is Ellipsis. Notice actually here we have a long trust bar. Whenever you see a long trust bar like this, we need to be very careful because it's likely to be an exhaustion move. And based on our rules is to close or next open. So if you notice actually the next day it didn't move upward but close poor. So here on this bar you should have gotten out of the trade. Here we have a re-entry. So here you can get in this trade again. And over here itself we have a bar that actually have a big gaps, but they actually close poor. Again, worst case you sell here, right? But something like this you should take advantage to actually lock in partial profits. This is SIIC environment. Here we have a very nice trigger and a pullback and stay between the band, which is still okay, and begin to actually move upwards very nicely. Notice actually the bar start to actually increase in range compared to the recent past. So that shows that actually this is extremely strong, and this is huge. This is what we call an extension bar, and normally extension bar is also an exhaustion move. We should actually lock in profit, and we can get out on the next bar. Okay. This is KTL Global. Again, here we have an extension bar. Alright, and notice the volume spike. So again, if you have taken a trade like this, it's good to actually take profit. Right, if you notice actually you pull back before you recover, and that could easily be something like 2 to 3 weeks. This is resource premium. Over here we have a trigger. If you notice actually, before this trigger happened, there was a 2 up bar. So perhaps after this 2 bar itself, likely to pull back. So notice actually over here it pull back. The better entry will be here. Alright, again, if you have taken a trade here, the stop loss is one thing below the low. Okay, it's just that you wasted 2 days because when the stock pull back, you kind of wasted opportunity over here. And here it began to actually break out again. If you enter here, that would be better because immediately you follow through. Now, this is where you start to actually tap. So this is something you got to watch out, pay attention, because before that, they are all above the band. And over here, you trade inside the band, and this is below the band. You could have gotten out worst case here. But again, you can take partial profits when you close off high and you're tagging. This is Yang Zijiang. Again, this is a very nice break here. Notice the good volume. Now, this is not extremely high volume, so it's good volume. If you notice, the subsequent bar all trade above the band. It's extremely strong. And this is the first tag. So you can have just taken some profits from here and closely manage the trade. Now, this stock itself, M1, there was trigger, but this is something we got to be aware of. Sometimes this gap is caused by dividend, so we should be mindful of things like that and not take take a short trade on this. All right. This stock is illiquid, so we don't trade. This is Swissco. Again, there was a trigger here, and before that there were 2 up bar. So again, this could be overextended. If you notice, after that it pulled back. So it'd be better to actually wait for this to move on the upside, break this high to enter the position. So again, just be mindful, if the stock has run up before a trigger, this could be overextended and it's likely to actually pull back shortly. This is a Groko land some time back. We have a break here. Notice the volume spike. So whenever you see a volume spike, you've got to just be aware that this is likely to be an exhaustion move. The next day itself, you've got to closely manage it. What you can do is actually use a shorter time frame, in this case 15 minutes. If you notice, it still move upwards, and on this 2 bar it closed poor, and we could just get off this trade. You notice subsequently it closed extremely poor. This is Semco Industry. Here we have a triggers, and it gap through, that was a bonus. And again, if you notice here, we have a support. It is good to actually set a target here to lock in your profit. This is high flux. There was triggers. If you notice, after the trigger itself, it drifted downwards with low volatility, which is quite evident of the dynamic line. Alright, so here if you gotten out of the trade, it's okay because basically it just drift down with low volatility. Here we have a trigger and we have a range expansion. This is IX Biopharma. Here we have a triggers again. On SI station, you can actually plot the indicator VOP, volume on price. And if you notice here, significant resistance over here. So sometimes be mindful of overhead resistance. So you should avoid the trades. And maybe after the pullback, if you break new high, then we enter. This is Asia Pay TV's very nice trigger here for shorts. If you notice over here, it was just tagging the lower band. And here itself, you notice it moved away from the band and with very big gap. So that shows that actually it's extremely strong. And notice the volume spike is likely to rebound. So again, something like this here, you must know how to take some profit, because in the down markets, the rebound can be very violent. Okay, this is Costco. Again, if you have taken the short here, the gap here, very big gap and very high volume, likely to rebound. So you must know how to take in partial profit at least. This is Semcorp Marine. Over here we have nice trigger. If you notice actually over here itself, it starts to move down, but actually with low volatility, this is quite evident from the dynamic line. So any of the upward move is an opportunity for you to lock in profit. This is Super Group. During the February rally, this is one of the best performing stock in a short-term basis. Over here we have a very nice trigger. Notice the increase in volume, and it trade above the band, way above the band, extremely strong. Alright, and we could use the gap here as trailing stop loss. And this is the first sign of weakness. The rest are all up bar. This is a reversal bar. So we could have just exit the trade here. Alright, instead of waiting for it to close below the lower band. Now we can also switch to 2 hourly charts or hourly charts if you wish to closely manage. This is what happened. Alright, so this is a wide range reversal bar on a 2 hourly charts, and here we should just get out because this is extremely strong move. This is cinnamon slant. Here we have very nice trigger, move sideways before it move up again, and just manage it closely using the lower band. We have the first trigger here, which actually moves sideways without breaching the stop loss. Again, you got to just watch this closely. If you hit a stop loss, you get out, and your risk is limited to overlapping bar risk, but you enjoy runaway bargain. This is Jaffa. Again, this is one of the strongest stock recently, but this was taken earlier in February. Very nice move and pull back into the band, but did not break, and finally recover, tagging the upper band. And here itself is a sign of weakness which you must know how to recognize. Notice all this bar here close off high. So again, any sign of weakness you must get out, and this is what will get out trade. Sino Grandis. Now here we have the triggers, and the stock eventually got stopped out here, exit here, and recover. Here we have a re-entry and move up, making new high all above the band, and this is the first time it trade inside the band. It's a sign of weakness, and we closely manage it, and finally here it managed to trade above the upper band. So again, situation like this warrants some attentions, and here itself we could just trail using the lower band. So direct band allow you to actually identify when you should pay some close attention, when you should lay back so that you don't over manage or micro manage. This is a short trades. Over here, this is TT National. Here is the triggers. If you notice over here, it trade below the band. There was gaps, and again here you be mindful. You start to move inwards. We should try to lock in partial profits, and here we stop out of this trade. Here we have a triggers, and notice this line here is your overhead resistance, and don't be too ambitious. When you approach this area itself, it's likely to have some kind of reactions, and this is what happened. And if this does happens, it's good to take profit. This is Noble, a more recent one. Here we have a very nice trigger. Notice also the volume quite high, so we should closely manage. Sometimes we have throwback, and unfortunately we do not have very violent move. Notice over here the bar gets shorter, so we know it's losing momentum, and here you get out a trade. This is the second trigger. Again, notice extremely high volume, likely to have a reaction like this. So again, here or here you should take some profits, and here manage your half position closely. This is something I like to draw attention to. This is OZ Group. Here we have a very nice trigger. If you notice over here, the bar gets shorter. Alright, during the down markets, be mindful of short covering. You will experience something like this. Alright, so during the bear market itself, when you short any stocks, you have to be very careful of short covering, and you can be very violent. Notice over here, we have a series of down bar, and this is your up bar. So again, it closed above the upper band, so you should lock in profit here. Notice the next day, this is extremely strong. You shouldn't hold any position on this bar. Alright, so this is a pretty nice trade. So this video itself helped me to actually appreciate how to use the dynamic band to manage your trade closely. And it also helps you to actually hang on to a trade so that you enjoy a much bigger profits and not to lock in profit too early.